Well, hi everyone. Welcome towards this very interesting discussion. With me, I have one of my very close friends, Mr. Aswini Bajaj. Uh, I think Ashwini, I think we'll start off the day first by introducing yourself and then giving a big broad smile. The reason why I believe that it should be a big broad smile because the market's reaction towards the budget 2021 has been nothing short of spectacular. So Ashwini has been one of my very close friends. I think he has a very strong, I would say, a series of, reputation across the markets. He has done a commerce graduate from St. Xavier's College, Kolkata. More than that, I think the plethora of degrees which he has, I think just about tells the kind of stress he's done, on learning and growing himself. He's a CA, CS, CFA, FRM, CAIA, CIPM, CCRA, CIRA, CIIB, AIM. My God, I mean, I can't even understand the full form for many of them. But nevertheless, I think he's a fantastic personality. He's a guest lecturer at colleges, B schools, stock exchanges, corporate trainer. He's a trainer for professional courses and heads one of the prestigious companies in Kolkata, Leverage Growth. And I think it's been a real privilege, Ashwini, to surprisingly host you for a session because I generally am at the receiving end of being a host. But it's good to see you and good to interact with you. So again, with a big broad smile, 2021 budget. What are your expectations? What have been your reactions?
First of all, thank you so much for having me and for this wonderful introduction. And so I've known Kunal, through one of the sessions we had done with, I think, SRCC, and we had done a session together. And it was an amazing interaction then. And since then, we've been in touch, and it's been great. I think, Kunal, the reason why probably you're so humble is because the market makes us all humble with the experiences that we have. And with an experience, so I'll just quickly again introduce Kunal over here. So with 15 years of experience in this market, and I mean the kind of turbulent markets we've seen over the last 15 years with demonetization, with GST, and everything that's been happening is remarkable. And with the learning, and Kunal is one of the leading panelists with ET Now and is a regular with markets and market updates and stock recommendations and all of that. And after his Edelweiss stint, he's on his own now. So he is into mentoring, he's into advisory services, and also I keep on following your Twitter account, Kunal, very regularly and very ardently, actually, and trying to understand and make something, because I'm more on the fundamental side, you're more on the technical side,
Absolutely.
and more on the overall market side, actually. So I try to keep understanding what you're posting. So it's always a pleasure. And so jumping into the discussion about the budget today, I believe there was a lot of pessimism in the market. So when I'm looking at the overall view of the market as such, instead of trying to be the trying to give a verdict or something on a post analysis, everybody was expecting that the budget is going to be bringing in a lot of negative news. See, everybody was pessimistic. At
Absolutely.
least I can vouch for the people around me, and that did not happen. There was a COVID cess, which almost every news. Anyways, I think I have a little. Now we should start expecting absolutely anything and not rely on what is being posted in the social media. I think that's something we need to understand, because the way things have been going around, we were looking at a fiscal deficit of 6.5%, which is 9.5 now. So that is one major macro that we need to look at. And second, but it has not been negative. Everybody was expecting a tax increase. At least if you're earning more than a crore or a 2 crore or something, there was a major expectation in terms of an increase in the taxation, which I think has, no bad news is, even when I'm going through a lot of analysis and
Correct.
everything, and, it's a lot of not getting a bad news is very good news this time. So I think that is broadly what we are looking at. And other than that, I'll ask you something more in terms of the sector specific areas. But I personally feel that India is actually doing. I mean, it's see, you have to again look at the budget in the context of economy as well as the political party in the center. You have to
Correct.
look at the financial budget that way. That is my personal assumption. And when
No, I
you're
think it's a
looking at the
very fair
BJP
point.
government,
It's a very
yeah,
fair point, Ashwini, because there are two responsibilities which every government has. One is, of course, to ensure that the party remains to perform in the kind of manifesto, in the kind of agenda which they they come into the power. And the second is of course to try and ensure that you don't compromise that with the growth or with India's requirements as such. So I think that's a very important point which you've highlighted. Now, just to add with one, what happened in the markets, and I'm sure all of you guys would be dumbfounded with what happened to the markets. Now, there is a technical reason why, and this is going to be very interesting. So, before I ask Ashwini the next question, this is very interesting because what happened is, so I've been part of the last 15 budgets. I've been fortunate enough to watch the 15 budgets and more interim budgets as well. You can add that. This has been one of the times when, in the last 1 week, we had seen a dramatic reduction of positions in the markets. So the markets went in absolutely light into the budget. That was the best part about the markets because it was like, as you rightly said, Ashwin, that everyone was waiting for the budget even to pass out. There was a lot of negativity. There was a lot of fear in the markets that some kind of I would say a hidden tax structure or something which has been in the asterisk mark, I think that would probably come across and hit the markets on a negative side, and which is why you saw the positioning to be absolutely light. Just to give a number, start of 2021, the open interest, which is a way in which we try to categorize that how many participants are invested into the markets or in the trading aspect, it was at 2 lakh contracts on the Nifty. Now, 2 lakh contracts is a very sizable number. But imagine this number on last Friday, that was on one trading session back, had dropped down to 1 lakh 30,000 only. So there was a reduction of more than 35% of open interest, which means out of 10 people, almost three and a half, four people jumped out of the market. And which is why today, when the reaction on the budget was positive, you saw the markets participants jumping back again. So no one really bothered that the stocks are up 2%, 3%, 4%, but they wanted to buy those themes. Now, I have never seen, frankly, a stock like SBI hitting an upper circuit. Like, I mean, I don't remember the last time. Maybe it was maybe 4, 5 years back or 7, 8 years back that probably SBI would have hit an upper circuit or 10% kind of an upper circuit. So that was the kind of exuberance the markets were. It was one on the back of this feeling where people had missed out and they were going in light on the budget. And the second is because the budget did not disappoint, which is why they managed to come back again into the market. So that was one very important point. Now, I'll get back to my cap of hosting and asking you a question again. So as you rightly said, Ashwini, that there was a lot of responsible action from the finance minister, but uh, you know in terms of the current positioning of where where Indian economy is heading and where the global markets are positioned, rather the global economy is positioned. Do you think that this budget stands tall enough to try and stand true to the kind of expectations global investors have in terms of Indian economy?
See, there are a few things that we have to observe over here. As I was telling you, that we have to look at it in the context of the government in the center. Now, the BJP has been reputed to be investing a little too much into the infrastructure segment, which again has been a prominent piece in this budget. Second, I believe that they are being a little too bold in terms of going ahead with a fiscal deficit of this particular level, which I think, given that they're not looking at printing currency so much, and with the kind of FDIs we have seen, even FIs we've seen even in the last few months, I think it
Hmm.
is probably a bet that they can probably take. I'm not sure about it. I'll not be able to give you a clear answer on that. But it is bold for sure. Going for a fiscal deficit of this sort is a bit too much, according to me. Too much in the sense, not in terms of negativity, but in terms of something, a bold move that has been taken. Second, if you notice, the duty, the taxation part, which I think I'll again get back to you on, but because taxation has been always a pain point with me through my chartered accountancy days. But when you're looking at the taxation bit, there has been no change apart from the customs duty that you notice. So there is a very clear
Correct.
indication, if you notice, that one is ease of doing business and all of that they're looking at. The government
Hmm.
is trying to make amends in those areas where they can make things easier. They can reduce the outflow due to inefficiencies in the economy without
Hmm.
spending the money.
Hmm.
Bringing amendments, digitizing things. Digitizing has been one of the most focal points of this government over the last 2 years or 3 years at least that we are witnessing. Actually, it
Yes.
started with the GST and the demonetization bit itself, that they want everything automated. And the and that's what they're trying to do. They're trying to get all the linkages right. So the
Correct.
government is trying to do a lot of things where they probably don't have to spend money as well. And the infrastructure spending has been the core strategy of the BJP government, even when we had that has been somewhat, the core strategy of the BJP government, even when we had witnessed them with the Bajpayee G government earlier. And with respect to the global scenario, see, India is already standing very tall. And India is
Correct.
very important from a geopolitical scenario also for a lot of countries, not just one. And the customs duty, the way they are working with the customs duty, I think is a very clear indication of what they want exactly.
Exactly. Very true.
So there's not been much positive, but there's not been anything negative, which is a big positive. Because
Correct.
also what I find is that a lot of times, uh, panelists or people in general, analysts in general, when they are decoding or when they are analyzing the economy, especially in the post-COVID situation, they don't understand that you cannot compare India with a Europe or a UK or a US. You have
Correct.
to understand the country's context with respect to its population, with respect to its poverty levels, and given the COVID situation, how the country is performing, you need to analyze from that basis. You
Very
can't
true.
compare a country like ours to any other country for that matter in the entire world.
Very true.
Because
So
so, my question to you now, I would have a question back to you in terms of, how do you see the corporates and the taxes and how because the taxes have not been touched basically. They've basically left the taxes untouched. And even the corporate side, basically, they've absolutely left it untouched.
correct.
So, do you think it is actually not doing anything or doing something, not doing negative is also a big positive over here, given the
Well,
COVID
that's
context?
exactly that was the best part about the budget, because there was so much of fear, so much of talk, COVID says, then there would be some wealth tax which would probably come back again for the super rich, or tax the super rich. That has been the mantra which I think everyone has been fearing upon. So I think it was good to finally see that those fears were allayed. So I think that was the best part about the budget, because trust me, when I saw the reactions on ET Now for so many of the panelists, there was a huge sigh of relief. Now everyone at the end of the budget, when actually the FM sat down, there was a huge sigh of relief that harsh, finally no tax towards the super rich and the wealth tax and the COVID cess. So that was a very good positive for the market. So yes, as you rightly said, that a no negative is also a very good aspect about the budget. So that was why I believe the markets were pleased, or rather more pleased. And in fact, the actual part of the analysis actually starts from here on. So for all the traders, all the investors who probably believe that maybe they must have left out, they would have left out this day on trading day. But trust me, what this budget does is not to try and have a one day one show performance. This lays the stone. It's a foundation stone for many of the stocks and many of the sectors to outperform. So I think that's the beauty about this budget. So I remember clearly in 2020, just before the COVID crisis hit us, there was a lot of expectations from the finance minister, but apparently the budget 2020 did not turn out to be as appealing to market participants. There was a huge sell off, but after that you saw a bit of a reaction. The markets went into a counter buying mode, and then you saw a sharp correction coming by. I believe that this time around the reaction could be completely opposite. So yes, you've seen a frenzy kind of a buying today on the indices. You might have a couple of days of cool off, you might have a couple of days of sideways action. The investors would probably want to digest all the gains what have happened to the stocks today. And then when the market moves on next, I think it will be a much more mature way of reaction from the markets, rather than this just an amateurish kind of a reaction which traders feel that they would have feel left out from the markets today. So what we'll also do is we'll also request all the participants and all the viewers to try and write your questions along on the individual chat boxes. So whether you're connected on Facebook, you're connected on YouTube and such other forums, all you have to do is that as now I ask Ashwini questions, and then he throws back the more difficult ones to me. You guys can also try and write in your bit of questions, what you feel is a point of hindrance for your investment or your trading portfolios, and then I'll ensure that Ashwini answers the most difficult ones. So getting to the next set of question, Ashwini, that as you rightly mentioned, that there was an expectation that 6.5% fiscal deficit would be a good enough number, but the government went just way beyond, and went with a 9.5. It's an ambitious kind of a number, because it
Absolutely.
comes at a time when they are not taxing or not adding or leaving the other kind of taxes. So it's a very ambitious kind of a number. Now, on the backdrop of this huge fiscal deficit number of 9.5, what is your sense? Which are the sectors, and would this rather spending be enough to spur the growth to try and boost the economy from where we are right now?
Actually, I've been wondering the same with respect to how the government achieved the target of moving from a 9.5 to almost a 6.5, 6.8 number next year. So, from my understanding, is that I'm looking at the customs duty with a lot of focus, to be very honest, because the way they are increasing the custom duty on the select items, I believe what they are trying to target is to have a lot of SME, to have a lot of ancillary units which cater
Correct.
to the technology side, to the automobile industry or the mobile industry or the electronics industry to do well. They don't mind bringing in more of scrappage or to bring in more of metals and they've reduced the custom duty there and increased actually with the cess and all over there with the agri infrastructure cess. But
Hmm.
from what I see from the custom duty aspect is that they're trying to actually prove their point of Atmanirbhar Bharat over here. So this is something, and I believe that they are definitely banking on the fact that the GST collections, the tax collections, etc., is going to go up, given
Correct.
the kind of expenditure people would be able to make, given even the household credit as compared to what it was 4 years back to the income levels has increased significantly in our country. So I'm definitely, the government is actually quite optimistic, to be very honestly. The government is very
Fantastic.
optimistic also. So I hope the optimism plays because if another event like a COVID, or not exactly COVID, of course, I hope there is nothing like a COVID that's happening in the next few years because they've got idea around till FY26. They're talking about how they want to go on with their fiscal deficit. They're trying to keep the numbers strong with respect to the central bank. They are not too interested into printing currency. They're trying to digitize and make things more efficient. But if something really bad, I mean something, some major event that takes place, I'm hoping, I'm not even planning to touch upon a topic of a war or something, but we
Correct.
have tensions across the border in which we need to be cognizant of. So the budget, they have taken a bold move. As I started the discussion, as the point that I started with.
Correct.
So if nothing bad happens, a major bad event takes place, I think we're very good. So
Fair
the
enough.
MSME sector to me also looks good. The ancillary ones who are going to be helping out the large corporates, I think that is something which uh, will be benefiting. And with respect to your question on the global markets considering us, so not only just from a financial point of view, as an economy point of view, as an investment hub, but they'll also be looking at us, the way we have reacted in terms of being the providing COVID vaccines across the world, the kind
Correct.
of status we have built for ourselves. It's changed over the years. So I'm pretty confident that the way the entire world is going to be looking at India is going to be something phenomenal. But it's just that we are standing on very thin ice. I mean, any bad event, any major bad event that happens can
Hmm.
shake the economy with the kind of fiscal numbers that you're looking at. That is a very preliminary analysis or preliminary view that I could probably give you at this stage.
Correct, correct. Fair enough. So I think it's a very valid point, Ashwini, that you mentioned, that at the same time things look positive, but one negative impact, or one negative kind of an event could probably put us back yet again. So we take that point. Now there are a lot of questions already flowing in, so I'll probably try and mix up many of these questions. So one of the questions which I've highlighted from Mr. Debobrata De, he's asked a question, and it's one of the questions which I also wanted to ask you, that which are the sectors which one needs to now look at in terms of focusing on for investment, and especially in lieu of what happened in the budget today.
See, to start with, I'm read your offer document carefully before investing. I'm not giving any kind of investment advice over here. With respect to sectors, the banking sector, of course, has performed the best today, and surprisingly so. In terms of the way, I mean, 8% Bank Nifty shot up. So when I'm looking at these sector wise, I mean, it'll be too early to actually comment exactly, but I believe, of course, the healthcare industry is something that has to evolve now. That is one. And with the digitizing that the country is looking at, and with the digitization that the government is looking at, I think that could be one sector to look at. And I
True.
would be also, I'm very positive on the SME sectors now, the ancillary ones, which are catering to the larger corporates. And I want to look at more of, I want to actually get into more details about the custom duty changes and all, because that I believe is going to be a little edge for the industries today. And I think with respect to the banking sector, I don't want to comment because, with the kind of NPS we have and with the kind of restructuring and everything that is happening right now, it's a bit of a mess. And I'm a little wary. I'm a little skeptical about things.
Okay.
The one point that I have is on a stock. Like if I have to give a stock or a sector, infrastructure is always going to do well with the BJP government. And LNT is something that I do hold LNT, but I kind of missed out. I wanted to buy more, but it did not beat the price point that I was looking at. So
Okay.
I ended up not buying more, not adding more to the portfolio, and I regret doing that looking at the prices today.
I'm sure many of the viewers as well would probably want to, would have regretted not buying many of these stocks, especially with what happened last week. So I'm sure that there'll be a very general feeling from many market participants. There's one more question which has come across from Anshul Jain. Again, it's interesting that he's asked what is the future of PSU sector, and especially in terms of if you can. So, if as you said on banking sector, if you try and bifurcate the private sector banks and the PSU banks, of course, private sector banks we all know the kind of growth these stocks have, these companies have shown. But from the PSU banking pack, which do you think, and especially with the push from government, both on the recapitalization front as well as I think there was some hint that two of the companies from the PSU banking name would probably be put in for
Privatization.
privatization as well. So that was also a very good, point. And the markets would now take that as a positive that probably is the first time that they've done this for the PSU banking name. Now, in that light, overall, what do you think is one of the better, stocks on the PSU bank? If you want to, you can probably disclose the name, or else just an overall view on the PSU banking.
You're actually throwing the difficult question at me over here. So, looking at the PSU bank space, so one very important point that I noticed was that the government is taking cognizance of very small things. So, something like, that even if there is a bank that is defaulting up to 5 lakh rupees that you're insured, you'll be able to immediately withdraw. So, we
Correct.
have to understand from the context of again, the country that we're living in. So now, for allowing you to take your money out in a very convenient manner, even if your bank is defaulting, or even if your bank there is a run, to prevent that kind of run on the bank, it is very
Hmm.
important that very small step that was taken, and
Correct.
especially valid for the PSU banks. Now, coming to the PSU bank, of course, I'm absolutely in favor of the way they are digitizing, the way they are trying to modernize things. But at the same time, I am very skeptical of any PSU enterprise as such, because of the management of there is a lot of what do you call, the past has piled up within the banks also.
True.
So because of that, I'm a little wary, and I am somebody who's relatively on the more risk averse side in the market. So PSU bank is, to be very honest, a sector that I stay away from. And
Okay.
SBI is something still fine, because I know that something like an SBI, because ultimately if anything goes wrong, it'll all get merged into SBI. So
Absolutely.
one bank that I'm still okay investing into. But otherwise, I try to keep a little distance from the PSU banks, because
Fair
I
enough.
see people around me defaulting, and whatever XYZ they do with the PSU banks. So I'd rather stay away from PSU banks as such.
Fair enough. I take your point. So again, it's a very good thought as well that when you're not sure, I mean, for example, if there are so many stocks in a sector, I think it's best enough to go with the leader. So I think that's what I
Mhm.
think Ashwin is trying to highlight the crux of it. So very valid point. And I think in terms of technicals, if I can add a bit as well, you look at the
Please.
performance of the PSU banks in last 6 months. So forget about what happened in the last 10 years for the PSU banking stocks. The last 9 months, 10 months, the March 2020 low, and the stocks which have recovered from the PSU banks, those the kind of recovery which you have seen in the stocks, that itself tells you the picture. In a nutshell, you look at the performance of SBI with respect to the other PSU banking stocks, and it clearly tells you that the markets are favoring into the stock price. I would say forecast or expectations from SBI. So yes, the other stocks like maybe a Bob or a Canara Bank or a Union Bank, IDB, etc. They might look very cheap, both in terms of price levels, both in terms of the relative price with respect to their all-time high levels. But still, you look at the positions. So when I try and assess the positions, there is so much of favoritism which goes towards SBI, and you can clearly see it on the price performance as well. So today, for example, I think SBI was up some 12% or 13%, and the other PSU banking stocks there was some 7%, 8% itself. So on a day like today itself, it tells you that how market participants are viewing a stock like SBI. So I completely take your point as well, and probably I supplement with the additions from data from my side. Now there are many questions which are flowing across. So again, we'll keep on asking others to ensure that you have any kind of a questions, you just have to write it on the comment box, and we'll try and take as many questions as it comes across. Now the next set of question which I have is one relief to all individuals and corporates, that the fear element of COVID cess and tax to the rich, that has not happened for I would say salaried class as well as corporate class at large. Now, so as I said that no negative is positive, do you also think and believe that no negative is also a very good positive sign?
In this context, see, with again looking at the context of the country and the amount of expenditure that the government had to go with ahead with in terms of the COVID scenario, the kind of expenditure the government had to make. So if they would have not, so there was a choice, I believe. One, you go for a 9.5% kind of a fiscal deficit, or
Correct.
you increase the taxes, and the government chose the former. So there is a choice that I believe the government has made in terms of two options with respect to going for a fiscal deficit as high as 9.5% and betting on the fact that because people will have more expenditure, they'll have more, incomes in the coming year because of the growth factors, because of pushing in more, pumping in more money, because that will also have a multiplier effect when the government is spending so much amount of money into infrastructure. So with that, the government is expecting the multiplier effect to be that magnanimous that it is going to be able to bring down the fiscal deficit to 6.5%. If the government would have chosen to increase the taxation level, the markets would have reacted poorly. FIIs would have reacted poorly. And the sentiment in terms of, probably spending power, expenditure of people, etc., would have gone down. So I believe the government took, again, there is only one, obviously it's too early to say, but there's
Correct.
one major problem is that a major negative event does not happen. I hope a
True.
major negative event does not happen with our country, India, so that we are in a position to, cover up for whatever we have lost over the last year and a half in terms of the COVID situation. And kind of the recession, kind of the slowdown we already started witnessing just prior to COVID, prior to the onset of COVID. So that is and it is actually a major positive, something negative which is expected to happen because
True.
you understand this better that market already incorporates, it captures it,
Exactly.
it reflects the sentiment already. So a
True.
negative not happening is a big positive. So
Absolutely.
I'm
Absolutely.
pretty much for it. And the government is trying to get everybody into the tax gamut.
Hmm.
So I was to the extent expecting, actually, it would be wrong of me to say expecting because of the ongoing situation with the farmers. But I think the government will try and get more people into the purview of taxation. I was probably expecting that a certain level, an income above a certain level for the farmers also is going to be brought under the purview of taxation to maybe a certain level, if not more. But that
Okay.
was, I think, a very far-fetched expectation. Maybe we see that in few years going down the line. It's too early to
Okay.
actually say that, but yes, I see it totally as a positive. I want to ask you
Okay.
one question with respect to startups. So because the startup scenario is also has been pretty good over the last few months, the kind of inflows we are seeing in terms of investments into the startups. Do you have any take on how the startups are going to be impacted with this moving forward?
No, I think it should be on a very positive note, Ashwini. In fact, the way in which we assess, how the markets are reacting is a very simple manner. There's how the IPOs have performed. So you look at the, 2021 and the kind of flow of IPOs which have come across. It tells you that there's so much of demand in the market
Hmm.
for many of these stocks. And, it's not just that because we are into a bull market, because we are into a recovery, because everyone wants to be invested into equities, but some strong, solid businesses have got that premium which they deserve. So in last I think 3 months particularly, there have been a slew of IPOs, and more importantly, there are so many fresh companies which are coming back to the markets and trying to raise capital. So the eagerness of the market towards these companies wanting to launch and come into the markets to try and raise capital, that itself tells you that the reaction from the markets towards the startups, towards the companies who are looking out for fresh funding and raising capital, I think that's a very positive for the markets overall. So I, for one, believe that I think we are into such a beautiful scenario, beautiful setup, not just domestically but across the globe. We've seen some phenomenal, I would say, price actions going across in U.S. markets as well. And I think on that backdrop, it just about seems that we are into a dream run, which probably no one would have imagined in sitting in their homes in the month of March and April 2020. So I think it comes as a very positive surprise. Now, so there are a lot of questions. Ashwini, what I'll do is I'll just try and take in as many questions as I can. So we'll try and answer as many viewer queries as possible. Sen Gupta has a very interesting question. It's something which even I am perplexed with. So he's asking that with petrol and diesel prices on the surge, the current budget has not done anything to control that. Now he's asking, could you please share your views regards to that?
See, I think my personal opinion is not going to go well with the audience with this one, because I'm actually not against the increase, or I'm not against the inaction of the government with respect to controlling the diesel or the petrol prices. I'll give you a few reasons. One, because the government is investing a good amount of money in terms of having solar power, solar parks installed across the country. Second, I'm also pretty positive in terms of the wind energy and the way the government is trying to increase the amount of renewables. When you start comparing with the European nations, so now the problem is you cannot do
Hmm,
selective comparison with the nations abroad. You want
hmm,
facilities, the ones that is there in Europe, but you don't want to pay for it the way we have to pay in the countries abroad. So, except when you're eliminating the countries, oil producing countries, when you do that, when you're looking at most of the prominent developed nations like a Europe or something, US and all of that, when you're looking at the petrol prices and diesel prices over there, it is very much comparable or even 10 to 20% higher as compared to what we are paying. That is one. Second, the government is always going to be pro uh, relatively low income level people. Now, when those people are taking a public transport, just understand that a 1 liter petrol price of a 10 rupee increase or a 5 rupee increase or whatever is not going to increase a bus fare by that amount, because ultimately the entire cost gets divided amongst the
correct.
number of people who are traveling or who are taking a public transport. If you're
Hmm,
taking a vehicle or a private transport, which is again, if you look at it in the context of discussion with the Union Minister Nitin Gadkari ji was having very recently,
hmm,
in terms of increasing taxes or scrapping off the cars, who are a certain level, which is
correct,
older than a certain number of years. So when you look
correct.
at it in that context, when you look at the importance of environment and climate, and looking at Delhi pollution, looking at Kolkata pollution, we have
Hmm,
ambassadors, yellow ambassadors flying in Kolkata. I'm from Kolkata, and you have those yellow ambassadors still 20 years, 25 years old, moving across, driving across the cities, and dilapidated even inside or outside when you're looking at the condition of the cars. So having that sentiment attached is not going to be saving your environment. The levels of pollution are equally bad, if not, I mean, equally or marginally, falling behind or catching up with that of Delhi pollution. And the electronic vehicle that is, foraying into the market. Tata doing the best in terms
correct.
of, in the electronic vehicles in the market, because of which they are, getting a lot of traction in their the vehicles and all. I mean, 60% of the EV sales or something is registered by Tata Motors. And
Yes,
we are
yes,
looking at now increase in the electric vehicle infrastructure. In Calcutta,
correct.
also I've started seeing EVs around me. So, given
Hmm,
that entire context, that public transport, people at in the lower income levels who are using public transports not affected. It's pro environment. It is in sync with that of the renewable energy consumption that the government is trying to increase, and
hmm,
also in terms of when you're looking at the road taxes, etc., with the union minister, and when you're looking at it in context of his plans with the scrappage policy and all that the government has come up with in the finance budget today. Looking at all of these pointers, I am pretty very happy that okay, you don't reduce the prices in terms of petrol, diesel, and government को भी तो पैसा चाहिए. How will they spend? You don't want taxes to increase. You don't. Where will the government get money from?
Exactly, exactly. I think
I
that's
don't.
the ending part is the very very valid comment that government को भी पैसा चाहिए. I mean, where is
Absolutely.
it if they don't tax you, if they don't tax the corporates, if you don't levy a cess, I mean, in what other manner can the government also collect? So that's
And
a
you
very
have a
valid
problem.
question.
You use a metro, no? You use a metro station. There are so many metros that have been increased in the city. Even Calcutta is getting a Delhi kind of network very soon. Hopefully, in the
Correct.
next 5 7 years, we'll have that kind of network built. So you use a public transport if you have a problem with the price increase in petrol or diesel. I think that is
Absolutely.
what my personal opinion would be, being a little more concerned about the environment or something. So I think uh, use a public transport if you have a problem.
Yeah, very true. And I think in many of the countries as well across the globe, I think there is more stress which is given towards public transport. I remember, I think in Singapore as well, I think the amount of charge which they levy on registering a vehicle as well as getting a driver's license, I think is just phenomenally high. So
Okay.
and because the stress over there is that use your public transport, I think that's the biggest advantage which the government stresses upon. So very valid point, Ashwini. There's one interesting question again from the sector specific. So I think Ashwini has answered a lot of questions on the PSU banking stocks, this investment theme. He's discussed on banking, the fiscal deficit part. Now, there's one interesting question across, which is on the insurance, FDI, which has been increased from 49% to 74%. So, I think Vivek Bohra is asking a question on this. So, what's your view on this?
To be honest, I have not analyzed this, and I would like to throw this question back at you, Kunal, if you could take this forward.
No, I
Broadly,
think it's
insurance
a
industry is
very,
doing well.
I think it's a big positive. If you ask me, frankly, I think it's a big positive
Okay.
for the insurance sector. What I sense across is that when there is an increase in an FDI limit for a certain sector. I remember I think something similar happened to telecom sector. A few years back, media had gone through a similar kind of a increase in FDI limit, and there were many other sectors which I think in the last 5 7 years they have seen these kind of FDI increases, and the kind of responses which we've seen across for these large cap stocks have been phenomenal. What this also opens up is the kind of so there are very few stocks within the insurance space. That's the beauty about the sector. It's not that you have like 20 stocks or 15 stocks, 10 mid cap, 5 large caps. It's not broken like that. It's broken into just 3 4 5 very
Yes.
specific names, and all of them are high pedigree. So whether you
Yes.
look at SBI Life, whether you look at ICICI Pru, HDFC Life, General Insurance, I mean there are very few set of stocks, but all of them are high pedigree. So this increase in FDI from 49% to 74%, if you ask me, I think is coming at I would say an apt time. It helps to boost not just the stock specific price action, but it gives the FDI the investments to try and increase more holdings into these names, and they can participate. India is such an underinsured country. I think if I'm not
Yes.
wrong, I'm not sure the exact statistics. Maybe I'm wrong a bit there, but I think it's in single digits that the number of insurance or the penetration of insurance is in India. So I think in that aspect there's a huge possibility of a growth which could happen into this space, and especially I think just to add on to a last point over here is that what happened with COVID crisis last year, and I
Hmm.
think that itself tells you that why insurance being a must for every
Yes.
individual, whether it's a health insurance, a mediclaim, or such other policies, and those can probably be looked upon on an individual basis. But insurance as a play has a much longer, much stronger, and a much deeper penetration which I believe could be possible in India.
It's quite enlightening actually, because I've not been following the insurance sector very well. And yes, we've got just a barely few players, and absolutely the COVID has brought to light, the importance of a lot of things. I think even the real estate sector is seeing a lot of changes or a lot of activity, I believe, post the COVID situation. I mean,
Correct.
people had started, I mean, even when I'm interacting with especially people in the age bracket of 20 and 30, they were more about getting on the more consumeristic aspect.
Hmm.
And there is always an emotional quotient attached to the house you live in. And there has always, now we have started analyzing that you don't need a car to own. You can just simply use an Ola or an Uber, and it's
Right.
easier to rent an accommodation than to actually buy it. And that kind of mentality is again going for a toss and a little bit of change in terms of post COVID situation. So the insurance along, I mean, since you brought out the insurance aspect, the COVID aspect in insurance, I think quite a bit it applies to the real estate industry as well, I believe.
Absolutely,
Yeah,
absolutely, very true. Yeah, yeah. So we'll have the next question. In fact, there are a slew of questions, so I'll try and club those questions. There is one question which is on gold and silver, the custom prices which you're talking about. There has been a there's been a tinge or a tweak towards the custom prices. Now, what could happen to the sector overall, and what is it in terms of view or in terms of your outlook on this asset class?
see, gold and silver is something. So I converted. I don't know. I made a bad mistake, or I'm still happy with what I did. I converted a lot of my mutual fund investment into gold. So at that point of time, that was maybe 7, 8, 10 months back. And at that point of time, the mutual funds kind of went down. And at that point of time, gold shot up by around 17, 18, 20% or so, 18%. And now it's back to a 5%, 7% range. But my perspective over here is a little different, maybe from what everybody else would have, because I believe that there is a lot of currency printing across the globe, and I somehow am losing a little bit of faith in the currency, not so much in the Indian currency, because one, we are getting a lot of FIIs, and
Hmm.
because also because we are not printing currency that way, and
Hmm.
inflation, major challenge that the government has to tackle. They cannot fiddle around with inflation in our country. The country will not tolerate, the people, the public is not going to tolerate high inflations. So the government will not be able to print currency the way they feel like. That is
Correct.
something that they have to be very careful because of inflation, because the government cannot let the inflation go high. Because of that reason, I'm still having a lot of faith in our currency. But when I'm looking at the global context, I somehow have a little, I'm a little dicey about how the USD versus yuan and all is going to be playing out in the future. So that is
Hmm.
the reason. And I have also realized that I don't want to count the jewelry of the house as a part of asset class in terms of my portfolio per se,
True.
because you're trying to liquidate it, 30-40% of the value is immediately gone in terms of making, in terms of purity, etc. And I have seen this first hand basis. So that is the reason why I want a good 5-7% of my allocation of my portfolio towards gold and silver. That is my personal opinion, and I know it is something that may not be very much corroborated by people at large. So I
Hmm.
look as more of a diversifying and more of a hedge, and not as a return enhancing asset class. So that is what I look at it as. And I don't want to hold too much in the form of currency. I want to
Hmm.
hold in the form more of real assets in the given scenario. So that is what I feel about the gold and silver aspect, at least.
Fair enough. Fair enough. So valid point, which Ashwini is saying on gold and silver, that it has to be part of your overall portfolio as well. What percentage you are looking at, whether it's 5%, whether it's 10%, 15%, that depends on your I would say your overall positioning of your portfolio and what's your risk appetite. So there are a lot of factors to try and look at it. You can't have a I would say one number fits all for
Mhm.
each individual. So I take your point over there, Aswini. There are a lot of questions on. So there's one interesting question which again it's a difficult one, so I'll throw it to you directly. There were reports on stress on the retail segment. So it's from Bhavin Gala. He said that there were some reports on stress on the retail segment. However, given the impetus on propelling the spending consumption by not increasing taxes and high fiscal deficit, what is the view on the retail focused banks? So he's trying to combine both the private sector and the PSU banks, and he's specifically looking at the view on retail sector banks, retail focused banks.
See, again, it's actually a bit difficult to answer that way. But from a demographic point of view, when we look at this question, the consumption or the consumption is increasing. There is no doubt about it. When you're looking at the level of urbanization in a country like ours, that is also on the rise. The next thing, when you look at it in terms of e-commerce industry, so tier two, tier three cities and the towns and all have much more access towards a variety, a huge range of products all across the country. So you can order anything from anywhere. Another very
Hmm.
important aspect that is happening over here is because of social media. Now, because of this, because I deal with the kids, with the students on a daily basis, and I know for a fact that these people want, the moment they see somebody driving a car, somebody wearing some brand or doing something, they want that. If one
Correct.
person is using, for example, what do you call those selfie sticks and all, everybody else wants it. So there is a
True.
major a herd mentality in terms of consumption, and these idiotic
Hmm.
influencers Instagram and all of that. They're just adding on to this. But the problem over here is, and also if you notice, there are companies like a Five Paisa and all, which are enhancing the consumer credit. Again, to mention, definitely a Bajaj Finance kind of a company. So when you're looking at Bajaj, the entire business model of that company, even when you're
Hmm.
looking at others and all in the fintech segment, especially in the fintech credit segment, it is increasing. So definitely when I'm looking at the retail economy and when I'm looking at
Hmm.
the increase of credit in the retail economy, and I'm talking about non-home loan, non-auto loan, I'm looking at personal credit for consumption. So I see an absolute increase and an absolute exponential increase that too in this segment. So the retail segment is going to be is definitely going to be on the upside. But the point is, in terms of the credit aspect of it, I'm again very skeptical. So as I mentioned
Hmm.
that with to PSU bank, because are the incomes increasing that significantly to match up
Correct.
to the credit increase that people have or the consumption that people have? Because I'm seeing very short-sighted mentality with the youth,
Hmm.
of the youth. I wouldn't, categorize the entire youth community as that, but
Hmm.
there are a lot of people who are more into investments and savings and all, but there are a good number who are actually on EMIs. So, what is your mindset? I mean, and it's people like us whose job is to, push people towards more in terms of financial security, investments, and all of that. So, with respect to high fiscal deficit, yes, the government is definitely banking on an increase in tax revenue,
Very true.
be it direct taxes, be it indirect taxes, basically for the consumption side of it. But actually, on the PSU bank side, I would still not want to comment.
Fair enough. So I think it's a very valid point again that Ashwin is trying to highlight. He's trying to say that it's more to do with the herd mentality, or what you call it as the bandwagon effect, where
Mhm.
if one of the asset classes or one of the methods goes, I would say, catches a bit of a hype. There is a lot of catch up effect from across many individuals. This is exactly what happened with what we call as the Robinhood traders, who actually participated quite strongly in this bull market. So which is why the I remember very clearly. I think, Ashwini, that in October November 2020, everyone used to call this as one of the most hated bull markets, because there were so many individuals who had missed out. I remember that everyone started to repent and say, "अरे भैया मैं 9,000 पे bullish हो सकता था, 10,000 पे हो सकता था," and they started to buy at 12,000 and then 12,500. These are nifty levels. So I'm sure that many of the individuals still feel that this is one of the most hated bull markets. But hey, bull markets actually begin like this. They start on a zone where there is so much of fear and so much of capitulation. I mean, what better than the crisis of COVID? Yes, of course, we have the benefit of hindsight now. But then look at the platform, and trust me, when I look at bull markets, you look at the study for bull markets, and I'm saying not just in the context of India, because we have just a very brief history of 20 odd years, 20-24 years for the history for Nifty. But you look at across the globe, and especially the US markets, the last 100 years of history for the US markets, and it tells you so amazingly that bull markets, they don't last for just 6 months or 9 months. Everyone has feared, or probably missed out entering into the first leg of this 6 month, 9 month strong uptrend. But bull markets, they move into classic stages where the first move is the most difficult move to capture, because as we say that to break strong pessimism, you need an equally strong optimism. So we were into so much of a pessimistic zone. The markets have just got that bit of life of optimism. Then comes the stage where you'll see a mature reaction from markets, where the results and the prices would be digested by a lot of market participants. And then starts the actual bull market, where you will see so much of synchronized actions. You will see companies growing, you'll see the numbers growing, you will see the prices of the stocks as well growing. So I, for one, believe that this is a big bull market, which one is which we are lucky. I think I'm lucky to be a part of this third bull market for India in the last 15-16 years, from 2006. I've been very fortunate. So yes, I think that's a very valid point as well, Ashwini, which you mentioned. Now, now there are a lot of guys who are asking about one important aspect, and that's cryptocurrency. Now, there's one specific question from Anshul, that what is the future of cryptocurrency in India? I know this is offbeat a bit, this is off the budget topic. But then again, it's a very interesting point because I remember, I think on Friday or over the last weekend, there was one circular which was passed that RBI is looking to launch its own digital currency, and they would be looking to ensure that they would not want to have a separate currency, digital currency from many individual companies or states. So I think in that regards, this is a very important I would say question, because as the finance minister also started that this is the first digital budget of India. So I think in that aspect, cryptocurrency and the future of it becomes very interesting question. Your thoughts, Ashwini?
See, I've been teaching fintech and I've been teaching cryptocurrency and bitcoins as well as a part of the curriculum. But I have been relatively on the skeptical side with respect to the cryptocurrency Bitcoin per se and the
Okay,
other range of cryptocurrencies we have, because I look at it from a very very fundamental point of view. But at the same time, again, with my opinion, I cannot justify the increase that we have seen in the form of bitcoins and all. But
hmm,
given the context in with respect to India, so I believe that yes, the governments are going to be looking at digital currencies. We are actually going to be waiting to see how things work out with China and its own digital currency to get an idea, rather than getting into a mess, because China is in a position to take that risk, that challenge, that experiment. But we are
correct,
probably not in that position. And when you're looking at cryptocurrency, if you start allowing different currencies across the country, you have to understand that all the macroeconomic variables are very related to currency, be it inflation, be it your exchange rates. So you cannot play around with things like an inflation and the entire monetary structure of the country that easily.
hmm,
So digital currency, yes, I see a lot of potential. Blockchain as a technology, I've worked with startups who are using blockchain as a underlying technology in different aspects, and we've done valuations from there for them. But I don't look at cryptocurrency very very positively. That is my personal opinion. But students who've been obsessed with cryptos and buying and trading and getting into crypto and all for the last over the last 4 5 years. But I have always been very very skeptical, because to use bitcoins in a regular basis as a mode of currency, we've seen one guy who lost his password for his hard drive, and the amount he was a miner, and and the amount of crypto he lost because of the password. He's got only one last attempt left, and he's got some $1 million worth of crypto in it. And when you look
wow,
at the charges and all, with respect to using crypto as a mode of currency, as a mode of exchange, it is not. I mean, I'm not positive on it at all, but he's definitely positive on the digital currency being launched. I think if China proves it to be a successful mode of exchange, I think it's going to
hmm.
catch up very quickly. And with UPI and with everything that we're doing in terms of the fintech space, I think it's going to be faster than what we are probably going to expect.
Absolutely. So I completely agree with your point. That the fintech space is something which is going to, I think, drive up crazily high from these levels, and I think which is why you saw the obvious demand. So I think just to put some sectors into context, that's why you saw this huge fervor in IT names. The reason why stocks like Tata Elxsi went up 5x, the reason why Infosys jumped up 2x, TCS jumped up 2x, and Wipro went up, I think, 3x. That's the kind of returns which you hardly see in a matter of 4 5 years, and you got to see
Right.
these kind of returns in a matter of last 9 10 months, and that's the general push and the expectations from the IT sector. So I completely agree, and I think that's where the markets have also reacted in a very very similar kind of a manner. They have given premium to these certain kind of sectors and certain kind of stocks which they believe could propel to a new
Right.
level of growth altogether in the next or in the second phase or the third phase of this bull market. So I think it's a very valid point. Now, just before we try and sum it up, now we discussed about disinvestment, we discussed about the fiscal deficit part. There is one important I would say fear which is lingering on the market. You sort of highlighted upon it, and that's inflation. Now, maybe the numbers may not the inflation, the numbers may not be showing the true picture, but as we can see around us, I'm sure many of the viewers would probably agree with me over here, that many of us are seeing around us the kind of inflated prices we are seeing, not just of the the essential goods which we try and buy out, but even from the commodities. You see the price hike of many of the cars. Look at the steel prices, metal prices, and when you go to
Talk
a
about
business house and you try and they'll give you the rate for the day. because they are not sure that whether the rates will last for the next couple of days. Forget about the next couple of days, even in the next few hours, the rates they keep on changing. Now, when you are into such kind of a scenario, into such kind of an environment where inflation in terms of numbers is just a matter of time would spike up, what would you view in terms of the disinvestment process, the fiscal deficit, and then the views on inflation going forward, and
So
of
I
course
was
its
just
impact on the
having
market?
Hmm. I was just having a word with my uncle, and what he exactly said was, "Mal bech ke nuksan kar rahe." Because the moment you're selling the product, the into steel, he's into steel. So the moment you're selling today, the price increases tomorrow. Of the raw material prices are increasing. So ultimately, even if you're making sales, you're making a loss, and that is a big challenge for the infrastructure, or I would say the steel industry. Steel industry, as you rightly pointed out, is actually facing the most of this challenge. I believe, if
True.
I'm not sure, but I think there is some reduction in terms of import of steel and scrap iron, and
Yes,
then there's also some kind of
yes,
relaxation that has been given to
yes.
copper. So copper mining also, there has been some level of relaxation that has been provided. So again, as
Yes.
I told you, the context, the subject line of the budget today was more inclined towards the Atmanirbhar Bharat, where they want the ancillary industries to pick up, where they want something of the opposite to what happened during the British regime. So the
Hmm.
Britishers would take the raw materials to England and then sell the finished goods over here, and that's exactly what we are trying to reverse over here with this custom duty increase, no impact on taxation. And with respect to inflation, there's nothing particular that has come out with respect to this budget on inflation, but at the same time, the government has to make sure that the inflation levels are not going to be shooting up. Because also, if you notice, the cement industry was kind of forming a cartel, was kind of manipulating, or I would say working around with the prices, and the government was not too happy around it, and they were kind of threatening to bring out some kind of regulation around the area, and especially the kind of investment we're looking at the infrastructure segment. So given this aspect, I believe the government will have to make sure that the inflation levels are under control, but I don't see the inflation levels to be going down a lot. As in, I don't expect the inflation levels to come down to a sub 4% level or something like that,
True.
given my very raw understanding at the moment. But inflation levels should not be increasing too high also. I believe that they're going to be in a relatively manageable, not too happy, but not too sad kind of level. I think that is my very, very analyzed opinion on the inflation.
No, I think it's a very fair point. I remember, I think in 2000, 9 and 10, inflation was in the, I would say, second, not in the double digits, but not just in the double digits, but it was more than, I think, 12% or 11% or 12% or something of that sort, if I'm not wrong. And I remember hearing a quote from one of the global investors as well, that they say that inflation till a certain extent is very positive towards growth, because it helps to boost the not just the overall profitability of the company, but it also tends to be more taken in a more positive aspect about the growth of the economy as well. But just when the cusp of the inflation goes into a tangent which is not being controlled by the regulators, that's where it gets into the more worrisome aspect. So I think the which is why the RBI is not panicking at this point of time. I That's what I believe, because they still believe that probably inflation could be into a number which could be still into a control mode. So once the inflation, assumingly, if it goes berserk, say in the second half of 2021, that's where I believe that you will see a lot of monetary action coming across. So it's a very valid point which you've thrown, that inflation as such is something to watch out for. One of the more interesting aspects. Ashwini, it's been great talking to you, but then I can't leave the session so without asking you from your specific stocks and sectors which you'll be looking at, eyeing what happened in the budget 2021.
I was just about to ask you the same question, being
I told you I'll
more
ask you the difficult
experienced in
ones.
the
I
market.
told you I'll ask you the difficult
Definitely.
ones.
Yes, but being in the markets, I think you'll give us a good roadmap ahead over the year for the stocks and all. In my personal opinion, see, all my students also know about this one. So I have been very bullish on ITC, and it has been a very, very stagnant stock. But also, given the fact that I wanted to be on a very, very low risk side, and it's giving me a 5.5% kind of a return in the form of dividend. And I don't
Yes.
expect the price to be falling down too much. So I have a very, I have a very secured investment in ITC. So ITC is one very good chunk of holding that I have. Apart from that, I have a good chunk of holding in Maruti Suzuki and Tata Motors. And Maruti Suzuki, I'm relatively still bullish, or I'm still positive on the fact that I think these guys are going to enter the electronic vehicle space exactly when they think that the market is going to be booming.
Very
So I
true.
think
Very
for infrastructure and the other players to experiment and do all the hard work and do all the R&D and everything, and then they would foray into it, because they've always been in terms of mass manufacturing and not in terms of providing luxury, and that is not their product positioning as well. So but at these current prices, I'm just happy to be invested, not to have liquidated any of my stock holdings, and to get back most of my losses covered, obviously, over the last 8-10 months, and to actually see a lot of profitability in good number of counters now, be it Maruti, be it Tata Motors, be it the IT stocks, be it the uh, and ITC and all of that. So the sectors per se, if you see, again, the problem that uh, I feel is the valuation that we are looking at right now.
true.
So at these kind of valuation, it becomes very difficult when I've seen a 830 for a Larsen and Toubro, and I was just waiting for it to touch 825 to just put in my money, and that did not happen. And now it's crossed 1400. But now, the moment in case it retraces to a 1250 level or something, I would want to invest. So infrastructure is something that I'm very, very positive on. There are stocks like Info Edge. So, at a point of time when I
Mm.
saw Info Edge kind of a stock, which was trading at 2600, it went down to around 1900, below 1900. I patiently waited. It again went shot up to like 2600, 2700. I sold the stock to expecting that it'll fall again and I'll buy. And it just did not happen, and it shot up beyond 4000 levels. So Info Edge is a kind of stock I would want to hold. But again, I'm not very confident at entering at these kind of prices. So Info
True.
Edge, SBI cards, if I could look at, because of the kind of consumption drive in the economy. But again, at the same time, I'm sure about the consumption increase, but I'm not sure about how things are going to be reacting in terms of the credit aspect of it. And
Mm.
PFRL, the retail segment, when you're looking at a shopper stop or an ABFRL or something. So these are the segments, the consumption segment. The healthcare I look at more in terms of the diagnostic and healthcare than the medicines and the pharma and the drug as a segment of the pharma sector. But I would not be able to give any recommendation. I'm just thinking aloud in terms of all the sectors that I can probably look at investing. The automobile sector seems to be, quite good over the way we've seen, especially over the last few months, the kind of
True.
sales that people have been recording, and it was very surprising to see like an MG first and then the Kia Motors doing the kind of phenomenal sales in India they
Exactly.
have, that too not in a 5 lakh 7 lakh car segment, which is
Correct.
predominantly Maruti and Hyundai. So
Correct.
the kind of so that also it is a little awkward. I mean, it's a little surprising, but at the same time, it is quite I don't know. It's quite interesting to see how these kind of numbers are being generated in our country. Aisha Motor, for that matter. So and also, I would say I would want to stick the top four companies in each of the segments. But now, given
Mm.
me also in the race and the way ancillaries are coming up, so I personally look at more of the demographic and the industry space than anything else. Uh, uh, and I don't know. I mean, I'm very skeptical about investing, but at the same time, there's a lot that is happening. So I'm waiting for good price point. So the moment I get a little correction in the good counters, like a Larsen and a Tubro, or maybe an ITC going down below 190, or the moment I get an entry point, I think I'll want to invest.
Fair enough. Fair
But
enough.
only
So
the
I
amount that
think
I
what
can lose.
I think what Ashmi is trying to say is very, very valid that, you will feel a lot of attractiveness towards. So there's one very important point which you mentioned, that you are bullish on, few sectors, but then it's better to try and, park your investments in the, say, top three, top four names from, these individual names. I think there will be two important factors over here. One is, of course, the, consistency of returns which you'll get, and the second part is the stability. So that's the also the most important aspect to look at, stability of returns as well. If there is any kind of a, assumingly, if there's any kind of a negative event which happens across the globe, then your money would be relatively shielded into these in large cap names. So I think that's a very, very valid point from Ashwini. I think if I was asked the same question, there would be two aspects which I would probably want to highlight. One is that I, for one, believe that this is a big bull market. There are no two questions about it. whether it's the start of liquidity push which has generated this kind of a flow, we can attribute to those kind of reasons. Every bull market is different from the previous bull market. The start, the midpoint, the end of the bull markets, they end in a or they behave in a much separate kind of a manner with respect to these historical bull markets, and that's how history is made into every bull market. Now, I for one believe that there are two paths towards investing, or at least from a longer term play. One of them, of course, is the stock specific approach. So, to my Facebook viewers, to my Instagram and YouTube viewers, I've mentioned a couple of stocks. In last 8 months, Tata Motors is what we spotted. I think at 100 levels. Tata Steel is what we had recommended at 370. And these stocks, I for one believe these stocks, they still look very attractive. So if for someone who believes that they would have missed out on the major of the run, hey, this is just the start. What I believe when I look at the long term charts for these stocks of what could be a phenomenal bull trend for these names. So investing in stocks, I think Ashwini could probably be one of the best guys in that business as well. But then there's second part towards this question, and I think that's been very intriguing. Uh, Many of you guys, so as Ashwini was highlighting, that 5% dividend yield is what he gets on ITC. Now, for many of you guys who are looking at safety of investment, I think there is a fund which has been, I think, just very recently launched of a dividend yield fund. I think it's from HDFC. I'm not recommending any mutual funds over here. But then this is very interesting thing, because what happens is in a bull market, it's not just that the stock prices go up, the corporates also make a lot of profit. And the corporates, as now they make profit, companies make profit, they would want to pass it on in terms of higher dividends. So you look at the dividend yield ratios for companies in historical bull markets. So whether it's 2000 96 2000, whether it's 2003 to 2008, 2009 to 2014, and so on and so forth, you look at the historical aspect where the dividend yields have increased in bull markets. So there is also a mutual fund which is available, and I think I just happened to read across and chat across one of the leading personalities from the mutual fund industry just a couple of months back, and he told me that there is a fantastic opportunity over here, because what happens is in a bull market you want safety as well as you want high dividend yield stocks, which invariably happens in stocks which are more stable and more strong. So stocks like ITC, Bharat Electronic, these are the names which tends to offer you a lot of safety cushion and as well give you a high dividend yield as well. So that could be one of the other aspects which one could be looking at. So if you got a I would say a risk averse kind of a guy, don't want to invest, your heartbeat just jumps up when you look at the stock price movement, this could be one theme which could be you could be looking at. Any final thoughts, Ashwini? Any final comments from your end?
I'll just add to that one. So basically, I'm also relatively on the risk averse side, and there are people who want to be involved in the markets, also to educate themselves because market teaches you a lot. So my
Absolutely.
personal view on investing, on my way of investment is I buy the large cap stocks, be it an ITC or be it an HDFC or a Larsen and Toubro or a Tata Motors or something, Maruti Suzuki, and all of these kind of counters. And I also buy if I'm buying in a MSC SMEs, as in the mid cap or the small cap segment, I'll be buying the market leaders in that particular small segment of their industry, in that subcategory of that industry. Other than
True.
that, mid cap, small cap, I'm better off putting in my money in the mutual funds because there is a relatively more amount of active investment that is required
Hmm.
in that segment. And
Hmm.
to save on the kind of cost we have in terms of the management fee and the admin fee, I invest through Nifty Bees, that is an ETF, Nifty ETF, and
Hmm.
through the large cap stocks and the market leaders in the mid or small cap segment. So that is my way of investment, so that I'm relatively on the safer side. My objective
Correct.
is not to earn dividend, but
Hmm.
I don't want to lose my hard-earned money. So I would
Correct.
want to secure the capital, if not the
Correct.
return. That is again that mindset is always there with the investors that they don't want anything to happen to the capital. They're not bothered
Correct.
about the 5-7% interest opportunity cost, but what they
True.
need is that the capital needs to be safe, and that is
Correct.
my priority as well when making investments.
That's why we say in markets that return of capital is most important than return on capital. So 2020 March, I'm sure many of you guys would probably want to stick this phrase in their minds that return of capital bhaiya is most important than returns on capital at that time, and there was so much of panic and etc. But great, Ashwini. I think it's been the kind of responses which you've seen has been just phenomenal It's great having you on the Facebook Live, and I'm sure that let's try and do this more occasionally. Let's not wait for the next round of budget, but let's be more frequent
Definitely.
towards this, because I'm sure that there's a lot of positive input which happens when both the aspects of markets come across, technical and fundamental. So I'm sure the
True.
viewers would probably have enjoyed this as well.
See, it was an absolute pleasure. See, you're more accustomed to being a panelist all the time, so it's relatively on the newer side for me. So it'll take some time for me to get used to it, but definitely looking forward to another one very soon.
Great, great,
Thank you
great,
so
Ashwini.
much.
Thank you so much, guys. Thank you so much, Ashwini, for taking out time for such a beautiful interaction. Thank you so much, guys, for your wonderful comments, and keep them flowing. If it's possible, then maybe offline, I'll ask Ashwini to try and answer all these questions which have been unanswered. So thank you so much once again, guys, for your participation. Thank you, Ashwini, once again. Thank you.
Thank you.